Okay, let's get this space. I'm Matt. I do marketing and community for Rocket Pool. Today's host is going to be Ken Smith, and we have a special guest joining us from Stella to discuss a new DeFi opportunity for rETH. Afterwards, we'll do a quick recap on some of the latest news in the Rocket Pool ecosystem. This space is also being recorded, and we'll get it up onto YouTube afterwards as soon as we can. But with that out of the way, I'm going to pass over to Ken, and we'll get this space underway.
Yeah, well, thank you, Mav. It's great to be back on. I'm back here in the States after my travel to Dev Connect in Istanbul and a little bit of time with the family over Thanksgiving. So kind of nice to get caught up with everything in Rocket Pool, and very glad to be back here hosting today's community call. So let's start off, and maybe we could introduce our representative from Stella. I've learned that Stella is a leveraged staking protocol that operates on the Arbitrum network and has a 0% cost to borrow. Who do we have with us from Stella today?
Hey Ken, hi guys. I'm Apoorv. Thank you so much for organizing this. I lead business development at Stella, and happy to be here and speak about the strategy that we have built on rETH and create awareness about it in the Rocket Pool community.
Yeah, well, it's great to have you on today's call. Maybe can you start a little bit for those? I've always enjoyed these calls because I get to learn a little bit more about the DeFi sector and all the different tools and abilities here. But maybe can you explain what is Stella and what does it allow a user to do?
For sure. So I'll start off by making a very small correction that Stella is a leverage yields protocol. We're not just leverage staking. But yeah, let's just jump right into it. So Stella is the biggest leverage yields protocol on Arbitrum right now. We essentially identify good and sustainable high enough sources of yields, and we try to add a layer of leverage on top of that, right? Is that we sort of enable users to borrow at 0% cost. So leveragers or borrowers, as we like to call them, can come on the platform. They borrow at 0% cost. They open their position. They farm their position. Once they close their position, they share a portion of the yield with the lender. So that is the sort of unique model where we have sort of departed more from the interest rate models, and I'm happy to discuss more onto uh, about the new model and why we made the strategic decision to move away from the old model.
Yeah, if you can talk about it, it's almost like it's a pay as you earn. It's instead of paying an upfront cost, you pay it in the rear or pay it as you continue to take the leverage position.
Right, for sure. So essentially, how traditional leveraged yield farming worked was there were two sides to yield farming, right? There was the lending side where users could come and borrow, could deposit their tokens for earning passive lending yields. And then there was the borrowers or the leveragers side, right? And these borrowers or leveragers would come in, they would essentially deposit some collateral, they would borrow from these lending pools and then create a leveraged position that would then LP into the yield source, right? And for opening this leveraged position, they would essentially borrow at a borrowing cost, right? Now, the good thing about this model, I'll rather say, is that it worked really well in the bull market, right? Where the borrowing cost was paid by the leverager, but there were 4-digit APYs for the leverager to farm out there, right? So the equation just made sense. But the situation in the bear market is very different, where the farming yields are not 4-digit APYs anymore, right? And what happens is when the leverager is paying a borrow cost, sometimes the borrow cost would increase more than the farming cost out there, right? Which would just make the leverager non-profitable. This is why when we looked at our own internal data and we looked at all the leverage yields protocol out there, despite the high APYs that were advertised, more than 50% of the positions on these protocols had negative APY, right? So that's when we sort of came back to the drawing board and thought from first principles that, okay, we need to create a mechanism where the lender, the leverager, and the underlying protocol are all aligned in terms of incentives, right? And that's when we flipped the model and said we let the leverager borrow at 0% cost. They do not pay up any upfront borrowing cost. Let them farm the position. Once they close their position, if their position is profitable, they share a portion of the yield with the lender, right? So, and if their position is not profitable, so the leverager does not have to pay anything, right? Which is extremely unique in my opinion, because we sort of call this in-house as no gain, then no pain for the leverager, right? And the way we have sort of managed to align the incentives here is that now the leverager does not have to worry about the borrowing cost. They don't have to worry about some interest rate model, some utilization rate. They can just open their positions and farm them. For the lender, now the lender essentially wants the leverager to win, right? Because if the leverager makes money, the lender gets a share of the profit and the lender also wins, right? So they want the leverager to win, and also the lender's upside is essentially uncapped now, right? It's not driven by some interest rate model. It's now driven by how much profits can the leverager make and what chunk of that profits is passed on to the lender. So the lender also, in some sense, wants the leverager to make money. And we, as a protocol, Stella, also only charge protocol fees when the leverager makes money. We also take a profit cut from the leverager. So in some sense, the incentives of all the three parties, the leverager, lender, and the underlying protocol, that is Stella, is aligned, wherein all three of us really want the leverager to make money and then share a chunk of the profits.
Okay, very, very useful kind of description and explanation. Yeah, I wonder if you could maybe tie that in. I mean, obviously, Rocket Pool being a liquid staking provider, I'm guessing that there's a tie-in to our LST token, rETH. How does that work? And maybe can you walk us through how an rETH holder or somebody who wants to benefit from rETH staking could use the platform?
Definitely. So I think we can all agree that LST has been the uh, one of the biggest trends in DeFi over the past year, and specifically Rocket Pool has managed to establish itself as one of the pioneering LST tokens out there in terms of scalability, pegging, and just the sort of community that it has, right? So we wanted to essentially leverage on top of staking and LST assets. And like Pendle has listed the rETH token pool, essentially the PTSY rETH pool for Rocket Pool. And that is essentially giving somewhere around like 5% APY for the if you directly LP on Pendle. If you go through PenPy, it's offering somewhere around 6.1%, right? So we really thought that for a PTSY rETH asset, right, the impermanent loss of this pool is really low because it's a pegged asset pair. So for this 6.1% base APY, what if we could leverage on top of it so that the community holders, the rETH community, which is anyways LPing into these Pendle pools, could LP through Stella and earn much higher fees, right? So essentially, if you LP into the same rETH pool on Pendle through Stella, users can earn up to like 45% APYs right now because we support up to 10x leverage there because it's an pegged asset pair. So that's the key idea for Rocket Pool community members who hold rETH and are currently LPing into the rETH pool on Pendle. They might as well LP into the same pool through leverage on Stella.
Wow, yeah, those are. I was just kind of looking at it. I guess that does really help magnify, or as you say, leverage and multiply the yield. And um, in looking at it, I guess one of the benefits you mentioned there is that if I understand that the pairing is with its rETH ETH, and so because they're a correlated asset, the likely chance for a difference in price in the wrong direction that would cause a liquidation is less than if it was an uncorrelated pair. Is that the correct understanding?
Yeah, exactly. That's definitely hits the bullseye. Just one thing I would like to add is that it's the uh, rETH PT SY pool. So the PT rETH asset and SY rETH asset pool on Pendle, which is again, like you perfectly said, it's a pegged asset pair. So the only sort of risk that users face is like the depeg risk of rETH and the smart contract risks of Stella and Pendle and PenPy that we have built on top of. And I think in terms of the DPEG risks, like rETH has sort of established over time that capability to maintain that peg and be one of the most robust LSTs in the ecosystem. And in terms of smart contract risks, both Stella, Pendle, and PenPy have gone through multiple rounds of audits to ensure the highest level of security.
Okay. And then a couple other questions here. I guess one of those is what caught my interest here is that you built on top of Arbitrum. And I wonder if you could talk about that, and are you doing any incentives with Arbitrum?
For sure. So we are Arbitrum native right now. The only and first chain that we have launched on is Arbitrum. We really believe on the DeFi ecosystem that is being built on Arbitrum is unmatched on any chain right now. And like true to the community to do Arbitrum, we wanted to like pass on maximal incentives to them. So there are multiple incentives that users for this particular rETH strategy on PenPy would earn. Number one is the Pendle does some Pendle token liquidity mining on these pools, which we get from LPing on the Pendle pool and we pass it on to our users. So users get that additional boost. Secondly, Pendle has got their Arbitrum STIP incentives, which they are running on the rETH pool, which again is collected by Stella on behalf of the users and passed on to them. Finally, the third is Stella's own Arbitrum STIP incentives. We are one of the only two yield protocols on Arbitrum to get these STIP incentives. And we do provide like additional 20% APYs for this strategy leveragers. And finally, like since Stella is built on PenPy, there's an additional 1.7% almost boost on the strategy. So there's an additional APY boost from there as well. So to summarize, there are major tailwinds that is going into this strategy and which is offering such high APYs right now.
Oh, excellent, excellent. And I wondered if you could just maybe take a moment and expand. You'd shared just briefly some of the risks in there, but would you mind just for those that are interested and maybe just share some of the risks that they should consider when doing their research?
For sure. So the first and foremost risk that users should be very mindful is looking at liquidation, right? And the only holy metric that you need to track for liquidation is the debt ratio. So when you're parking some sort of a collateral to take the leverage position, there's a metric called debt ratio, which tracks the health of your position. At no point should your debt ratio go more than 100%, under which circumstance your position is up for liquidation. So the average healthy debt ratio, in my opinion, is something around 80% or lower. So users should sort of leverage on top of that accordingly and keep track of their debt ratio. That's number one. Number two is on Stella, a position can be kept open for not more than 30 days. That's essentially done because we need the leverager to sort of close their position at some point to realize the profits and for that profits to be shared back with the lender, right? So users should be mindful that on the 30-day mark or before the 30-day mark, they close their positions. There are multiple checks and balances we've added in the Stella UI to ensure that users can add it to their Google Calendar, can integrate the Telegram bot so that they get a reminder and in some sense like keep track of their positions. And the third sort of risk I would like to talk about is impermanent loss. So essentially, like I said, the PTSY asset is a pegged asset pair, so there's minimal chances of impermanent loss. However, in DeFi, like a lot of things could go wrong. So you have to be sort of mindful and cognizant of tracking the pegging and make sure that that there is no big depeg that can cause impermanent loss. And the fourth and final one I would like to reiterate is the smart contract risk. Any smart contract DeFi protocol has an inherent risk in it. Uh, in this case, there are three layers of risks. One is Pendle smart contracts, the second is PenPy smart contract, and the third is Stella's own smart contracts. But all three of the sort of protocols that have built on top of each other in a modular fashion have done multiple rounds of audits with top tier auditing firms to ensure that this smart contract risk is minimized.
Oh, wonderful. And then What about future plans? Where is Stella going in the days ahead here?
For sure. Like I said, we are the modular layer of yields that build of leverage that builds on top of the best yields out there in the market, right? So for now, we want to just double down on the Arbitrum ecosystem and like support the more emerging and sustainable yields out there. So some of the native protocols that we're looking to integrate on top of are Camelot V3. We're very excited by their concentrated liquidity AMM that they've launched. They also have the Arbitrum STIP incentives going, and we think with Stella's Arbitrum STIP incentives, Camelot's V3 design, and Camelot STIP incentives, we can really provide some of the highest yields in Arbitrum DeFi right now. Finally, in terms of future plans, we're also looking at what is after the STIP incentives, right? So we are working on revamping our tokenomics and also brewing up something in the labs for Stella V2, which we're personally very excited about, and we'll release the details very soon.
Oh, excellent. And finally, last question here is if individuals listening to this call want to learn more about Stella or get questions or more information, where can they go?
Right, for sure. So the Stella website is the place that you can definitely start. It's stellaxyz.io, and uh, you can go through our documentation. You can follow our Twitter. You can look into our Discord as well. Like we have a lot of healthy discussions going around with DGen users sharing their best yield strategies, some tips and tricks going around. So that's a place to sort of get started immediately. Also to summarize for our ETH community members, right? Like if you hold our ETH or if you hold ETH, and if you're looking to earn yields on top of that, like what is your takeaway from this call, right? Where do you essentially deposit on Stella? So I'll break it down very simply. There are two paths. If you hold ETH and you want to take a leveraged LP position on rETH, you basically go on the strategy page on rETH. You can deposit your ETH single-sided. You can set a leverage, and with a single click, you can earn up to 45% in yields. It's as simple as that. In case you're not comfortable opening a strategy position, it requires some sort of active management. There's some sort of depeg risks, and if you're not willing to take that risk, that is completely understandable. In which case, you can simply go on the lending page on Stella, and you can just deposit ETH into the lending pool, into the hyper lending pool to be specific. And that is essentially because the ETH hyper lending pool is used to derive liquidity for the rETH strategy. And since it works on a profit share model, the hyper lending ETH pool is some sort of a beta play on the rETH strategy itself, right? Essentially, these are the two ways that the community members can very simply, with a single click, start earning yields on their rETH and ETH tokens.
Oh, excellent, excellent. And anything else that we didn't have the opportunity to ask a question that you feel is important for the Rocket Pool community to know before we conclude this portion?
No, I think this problem, like you've pretty much covered everything. Yeah, just to sort of reiterate, do visit on stellaxyz.io, check out our Discord, and if there are any questions, anything, we are more than happy to answer them at all times. So please feel free to drop a question, and yeah, we are at your service.
Oh, excellent, excellent. Well, I've been watching the trading channel in Rocket Pool. I don't see any questions yet from any of our community members that are there. But if anybody here on the call has a question, feel free to raise your hand and we can bring you up to stage. But I don't think I'm seeing anybody coming forward here. But I'd very much like to thank you for spending the time with us today and explaining to us in just such an excellent and straightforward manner, Stella, and all that it has to offer in the DeFi system here.
For sure. Thank you so much, Ken and the Rocket Pool team for having me here. I think you guys are one of the most phenomenal communities in DeFi. I hang out on the Rocket Pool Discord server too much. I think more than I hang out on Stellar server, which I should probably change something about that. But I think you guys have a phenomenal community, and yeah, like just glad to like build on one of the best LST sources out there.
Oh, well, thank you very much for that. Those are very kind words indeed. And yeah, there is something very special about the Rocket Pool Discord. It's more of a community than a protocol. So yeah, well, again, thank you very much for coming. You're welcome to stay for the rest of it here, but we have a couple of updates that will bring Nav back on to kind of bring us all up to speed with everything going on in the Rocket Pool universe.
For sure. Thank you so much, guys, for your time. Thanks a lot.
Nav, do we have you back with us?
Sorry, yes, I'm here. Just doing a bit of Discord cleanup. Okay, yeah, there's a few things to get through in terms of updates in the Rocket Pool ecosystem. Some that maybe we can chat about with you first, Ken, which are a little bit more on the technical side. And then towards the end, there are a few more marketing related topics that I can cover. So there have been a couple of interesting, perhaps unfortunate events in the crypto world recently that are worth discussing here, especially that might be applicable to the node operators. Obviously, the first part of this call being more relevant to liquid stakers, but there is some news for our node operators too. And the first one is something that is pretty core to the Rocket Pool protocol, to the security of helping to keep node operators safe, which is the withdrawal address. So I believe, Ken, you're up to speed, or maybe not, let me know, on an incident that happened recently with regards to this, and how to avoid running into trouble when you're running a node.
Yeah, I was fortunate enough to hear just great shout out to Whack and all his great content. I've been kind of busy in real life with a number of things and haven't had the opportunity to kind of stream through the Discord and read everything. But thanks to kind of the Rocket Fuel program, I feel like I'm still keeping up here. And yeah, I guess there was a recent slashing in Rocket Pool, and the individual whose unfortunate node was compromised and slashed what came to the Discord and shared a little bit of information about what had happened. And the lesson learned that I took away from the conversation, and the reason I included this item in here in today's community call, is just to reemphasize the importance of setting a withdrawal address in Rocket Pool in your smart node client to direct the funds that come from your validators to a separate wallet address. Just a little bit of review of the basics. When you run Rocket Pool, you're using a hot wallet that generates your validator keys and completes the signatures using your validator keys. And that wallet is run on the smart stack, at least in the current design. And because it's online, it's vulnerable. Now, I understand, and perhaps I'm a little bit wrong in this thing, but I understand that perhaps the vulnerability for this is that this individual also loaded those keys, or they used their keys with another hot wallet. I don't know if it was MetaMask or a browser-based wallet, and that was probably the compromise versus the node being compromised. Again, don't use your your daily wallet or your hot wallet or your phone wallet. Create your own node wallet. But more importantly, once you do, as you set up, really do select a withdrawal address that is a very secure address, a cold wallet or a hardware wallet that really is only designed to receive the funds. And unfortunately, in this case, the individual did do this. I guess they had some assets in their node wallet that they were using as a personal wallet or a daily wallet. And that's unfortunate. But the perpetrator also was, must have figured out, how to create a node, and unfortunately created a validator, and it probably double attest or had a slashing condition occur. But the fortunate thing, as I understand it, is because this individual did have a very secured withdraw address, the perpetrator will not be able to gather those funds. They did cause some malicious damage. It was probably limited to slightly more than an ETH, 1.25 or so ETH, because there's not a corollary slashing. And so the majority of the funds will go back to this individual. So the key lesson learned is really, if you haven't already set up a withdrawal address, if you have one, make certain that withdrawal address is a very secure wallet or account that is not used in a lot of places where you're likely to be penetrated from. So that was kind of my takeaway. I don't know, Mav, if you or the team, or if your understanding from the community has anything more to add to that.
That's a pretty good summary. And I guess, yeah, to reiterate, just goes to show the importance of the withdrawal address mechanism that is a core part of Rocket Pool, making sure that node operators can be as safe as possible. There are another couple of things somewhat related, relevant to node operators recently. One, I don't know if you tuned in, Ken, maybe it was a little bit early, but there was another Twitter space hosted by SSV. Some of our friends were on, Whack, Yorick, Nixo, I believe, tuned in to have a bit of a listen. I think there's a recording of that, again, hosted by SSV, that's worth a listen to. But something that was touched on there is the different kinds of decentralization, and one that's pretty important and has got a little bit of coverage recently on X is the importance of running minority clients. So this has been something, I guess, that's been bubbling away for a little while now, just in terms of making sure people are aware of the importance and potential risks of running a majority client, and to encourage people to shift across to a minority client if they can. But I did see something interesting in that another blockchain was having some problems due to something similar. I think it was a client bug, which caused some quite significant problems over there. So always a good time to remind people to review their clients and to help out if they can. I suppose at the end of the day, it does seem to be a lot of the larger, more kind of centralized operators who are perhaps contributing, but everyone can do their own part. Obviously, the Rocket Pool Discord is a great place to learn more about that and to get help switching over. So we'd encourage people to look into that if they're running a node.
Yeah, what's interesting is, thank you. I have not listened to that community call. I'm going to have to go back and listen to that on replay. But one of the interesting things is in DevConnect, I had the opportunity to host a panel at the Nethermind Summit on client diversity. In particular, it was on the execution layer client diversity. I know that Superfizz and the EastStaker community had really made a large effort with the help of Annie Abu and others in the community to focus on diversity on the consensus layer. But it was really eye-opening for me to understand the potential problems that a significant bug or failure in a majority execution layer client comes to. And one of the things I think that anybody listening to this call should know in here is that the upside is so great to running a minority client for both the consensus layer and the execution layer, especially with Rocket Pool. And let me just explain that due to the work of Joe and the client, the interface to switch your client, especially with the work that Patches has done with the rescue node that you can use in the interim during the switching, it is nearly almost frictionless to change your clients and still continue to attest using the rescue node, so that there's really no reason that people should not be running a minority client on both the execution and the consensus layer. And for instance, if I just tie it back into that previous case of the withdrawal address, one of the reasons that it was limited to just a very minimal penalty for a slashing event, the term slashing always connotates this really bad image of something near lethal in terms of cost. But so long as there aren't, 1% of the entire validator pool creating a slashing condition in a, I think it's about a month-long period here, the penalty is very minimal. There's no threat to the network. Just a minor accident happened with one node that doesn't affect the health of the network, so there's very minimal penalty. And so that is kind of the protective measure that we all afford. But that protective measure is really only given to those that run minority clients. So if this is not a call to action or a call to learn more about minority clients, I don't know what the concern about not running it is. My experience from running pretty much all of the clients through my tenure here at Rocket Pool is that they all the clients are excellent. There is no performance degradation or loss of revenue for running any one client over the other one. So certainly, why not run a minority client? Matt,
Yeah. Sorry, you go, Ken.
Yeah, no, I didn't know if you had anything else on there, but I did see another item that had come up here and came through the ping server, which is about a node operator that was in pre-launch that was almost dissolved. I don't know if you'd be able to share with the community a little bit more about that.
Yeah, so this is something that's happened every now and then. I don't recall it happening recently though, but just when people are launching their node with Rocket Pool, spinning up mini pool validators, there's an important step to actually get those mini pools online. Sometimes, for whatever reason, this step doesn't execute, and if the node or if the mini pools sit in this pre-launch state for too long, they can potentially get dissolved, and in other words, fail to launch. In the past, we've made attempts to contact people when, with obviously everything being on chain, it's that there's a node operator with mini pools in the state. I believe from memory it's mostly been successful. The problem here, of course, is that being a permissionless protocol, Rocket Pool doesn't capture any kind of identifying information. There's no email addresses unless someone is potentially active on Discord or X or elsewhere. It's hard to get in touch with just an Ethereum wallet. In this case, I think there were several attempts to reach out. I think there were messages in Discord, potentially Twitter too, and thankfully the node operator in question noticed and was able to rectify the situation and launch successfully. So that was a great outcome, and just goes to show that the Rocket Pool community is always watching, and just happy that this node operator had kind of chosen to engage with the community, and crisis was averted.
Yeah, and I guess the lesson learned is if you're a new node operator here, or maybe you're an existing node operator and have some more ETH and want to spin up another mini pool, one of the key things is it's maybe a little different than just sending a transaction and waiting for it to be confirmed. Most of our nodes are, very little maintenance to run and operate. Maybe just once a month you're care and feeding your node and updating the software. But during a launch, it's probably the one time where I think the recommendation for most of the rocket scientists is pay attention and make certain after the scrub period clears, you actually do see a successful launch of the validator and it begin to enter the queue and begin validating. So certainly around the time of launch, I think you have to be a little bit more aware of what is happening and just keep an eye on it. If you do encounter any problems, though, and I think this was the case in this one here, the Rocket Pool Discord, the number of rocket scientists and informed community members that could help you troubleshoot and get it back up to speed is amazing. So just pay attention during launches. After that, the care and feeding of a node is very minimal.
And of course, when launching with Rocket Pool, one of the options that the smart node gives you is to opt into the smoothing pool or not. And it does seem that the smoothing pool is tracking quite well for this period. You can monitor it on rocketscan.io or, of course, in Discord. Given that the period has only been active for, what is it, a week now, and already at 175 ETH,
Wow.
if you were to extrapolate out that line, which of course is not particularly scientific, but at least for now, the ETH that has accumulated, plus what seems to be a somewhat heightened degree of activity on the blockchain. I'm seeing gas right now in the 80s, perhaps a good sign for things to come, but it also might be an indication that some people may want to stay outside and roll the dice on getting a lottery block themselves, although could take quite a while based on, of course, the great research that Ken did. I believe it was last year, right?
Yeah.
When the idea of the smoothing pool was kind of being put together.
Yeah. No, it's kind of funny you mentioned this because I actually did get a notification earlier in the week that a little mini lottery block. I mean, not a large one, but I'm in the smoothing pool, so everyone benefited from it. But which, although I'm, staying as much as I can on the Rocket Pool items here for it, what is causing the high gas fees on Ethereum? What is the demand? It's been kind of up all week.
That is a good question. I saw that there was something recently around, I think it was an NFT. What was the name of the project? Trading was trying to look it up earlier this morning and figure out what it is. But I guess at the same time as, number goes up and unfortunately there is a bit of a correlation between price and activity. People are just, I guess, more active, at least over the past few days. It seems that according to Ultrasound Money, Uniswap has been burning quite a bit, just ETH transfers as well, and some other. Looks like there's a Telegram bot in here, and ZK Sync as well. Has been burning some ETH, so all sorts of different things. I'll see if I can scroll back and find this this protocol. But I guess on the one hand, good to see that the block space is being used and there's demand for it. Of course, if you want to use it yourself, the higher gas can be a bit of a pain. It might be a good time to consider L2s if you haven't already.
Yeah, exactly. Yeah, it's always interesting to me, the dynamics of this ecosystem and how they work. Always so much to learn and so much to kind of observe in here. One of the
It's
other
called Facet, apparently.
Oh, what is it?
Facet was at least what was being looked up. Burned 53 ETH in an hour. Interesting. Okay.
Oh, interesting. Well, one of the other interesting things I did see that go was one of the grants to an organization called OpenUX published some of their preliminary results. And this was about kind of profiling Rocket Pool node operators. I had a chance to kind of skim that a little bit. What were your thoughts of that report?
Well, first of all, it was great to see that there was a large amount of interest. I think it was 88 completes that they received, which was awesome to see the community of node operators helping out. There are obviously a lot of Rocket Pool node operators around the world, but not everyone is always active on the various channels. And of course, there is usually a lot of stuff going on. So while we did have a few goes at getting the word out, Not necessarily everyone may have seen it, but for those that did and did participate, thank you, because of course this kind of research becomes more valuable as more data is collected. So the best way to find these results is to go to the DAO Governance Forum. There is a thread called Introducing OpenUX's Survey Findings. The post there from Landsman has a link back to the full context of the study if it's new to you. And there's also a PDF version of the report which is available. It's several pages long, lots of great data and lots of graphs. So the next stage is these user interviews, which was kind of part two, a subset of people who completed the questionnaire and were willing and eligible to participate. And then the final report is due out, I believe, within a month or so, so not too much longer to go. Then at that point, we'll have the kind of full picture. But yeah, sorry, just 2 seconds. Yeah, a few of the interesting included the location of the physical node hardware. In the past, there's been some comments made out on X and elsewhere about whether people are running their nodes at home or whether they're paying a server to do it for them. There was a pretty good understanding and an expectation that it was the former, i.e. people with hardware at home rather than up in the cloud. But like with a lot of things that the survey covered, it's great to have some data to back up those understandings. In this case, it seems that 85% of at least the respondents were using on-premises hardware, which is great to see. There's more breakdown in terms of the ETH and the RPL that the node operators have, and then other things such as whether they're also a solo staker. I think it's, very interesting commentary on the kind of state of the Rocket Pool node operator ecosystem. What I would be very interested in to see is this is one data point at a point in time, to kind of jump forwards maybe after there's been some more upgrades and improvements to the Rocket Pool protocol, potentially maybe a low collateral in the future, and to run this again and to see what the results are like and to kind of compare that over time.
Yeah, I definitely agree with it. It was good. I think maybe Val said it best in one of his comments somewhere in there, where it confirmed some stuff that seemed obvious, but the confirmation is good. But there were actually some bits of information in there that are new pieces of information, and I think having this report and then tracking it over time is going to be excellent. And then last but not least, I did see a tweet here from Jasper that was retweeting there was a repost, but it was about something by an organization called P2P.org that actually announced as, I guess, part of its design or its feature set, it will actually delay what's called the get header command later in the slot. So let me see if I could explain this for a little bit. And what's interesting is I saw the tweet. Jasper, I think, had pinged me on a post that he had put in. But I'd actually read a research paper maybe a couple months ago. I've been really enjoying going to the archive server and looking at preprints of Ethereum research that's out there. It's really good content, and it's a great joy to read these reports and see these academia publications in there. But anyhow, I guess there was a study done that looked at MEV boost, right? If you look at the slot is 12 seconds long. What's supposed to happen is at the very beginning of the slot, you're supposed to ask for the block or produce the block. So if you're running MEV boost at time 0 in this 12-second slot, you go to the relay or all the relays and you say, okay, who has the highest bid? And then you accept that highest bid and you say, please give me that block header. and I'll go ahead and commit to that. I'll sign it. And once you sign it and return that to the relay, they issue you the block, and you can produce that block and distribute it to the blockchain. And the ideal is to get that in right about around the 0 second mark. The 4 seconds that follow is really for that block to propagate through the network. The next 4 seconds is for attestations on that block, and the next 4 seconds, or the last 4 seconds, is for attestation aggregations to occur, right? So you kind of have this 12-second block, each into little trimesters or whatever. And the first trimester, first 4 seconds is the block production. Well, anyhow, a paper was produced that said, hey, if you actually look at how the bidding occurs on these MEV relays, if you wait a little bit, you don't ask for that block header right at 0 seconds, you ask for it 1 second in or later, the bid can go up. It can go up by a significant percentage. I forget the number, but maybe it was around 10 to 15%, somewhere in that range. And they did a really great study looking at this. And they had raised kind of questions, and where this becomes a little controversial is, okay, that's great. I could play the waiting game, delay my request to build the block by a second and send it out, right? And the problem occurs is that it's you kind of steal from Peter to pay Paul, right? Like, it works so long as everybody else is honest and kind of publishes theirs right at the beginning of the block, because all you're trying to do is you're just trying to extend the time for bids within your window of your block proposal. And if everybody plays that game, it's unhealthy for the network, because no one can win because you don't really have the bids again. And then two, it allows less time for that block proposal to propagate through the network. But I think Jasper's post of it and a lot of the commentary on Twitter that I've seen, or X, excuse me, has been that this maybe is antithetical to running the blockchain, right? If you're going to be a validator, you really should have the overall health of the blockchain first and foremost in your ethos or in your intent, and you really shouldn't try to manipulate it to gain this cost advantage. But I don't know, Mav, what was your take if you paid more attention to the Twitter comments on there?
I think in terms of the technical implications and the interpretation of what was going on, I'll leave that up to your commentary. You're certainly better qualified than me to discuss it. But from a higher level, I would say it's perhaps part of a worrying trend where there are these little things that crop up, whether it's the dominance of a particular client or the potential for other kind of attack vectors to exist for Ethereum, that while not necessarily a significant problem now, there's potential, if things continue in the way that they're going, for it to develop into one into the future. So I would say it's like another example where it may be something that's easy to brush off and say, oh, well, no big deal, nothing's happening right now. But give it time. If you have a lot of these things kind of growing and potentially impacting each other, could cause some issues down the line. And the thing with obviously a blockchain like Ethereum, while development does move relatively fast compared to, say, elsewhere in the crypto world, it's not a centralized company that can make decisions rapidly compared to the, say, more traditional corporate world. So it is something that's worth keeping an eye on. Perhaps there's going to be solutions in the future for these timing games and other concerns to mitigate any issues. But for right now, I think it's so important that they're called out and that there's a high level of awareness from everyone in the industry, that we know really what's going on, and at the very least, what we can all do is be aware of these problems. So.
Yeah, excellent. Well, one of the things that I was very pleased to see happen, I know in DevConnect in Istanbul, there was a lot of conversation about just everything staking. It seemed like maybe it was the choose your own adventure that I chose. It was mainly staking groups and staking conferences, but certainly among the Rocket Pool folks that were there was a lot of discussion about the increased competition in the space, the demand or the external pressures to add more efficiency and competition to Rocket Pool and kind of our tokenomic model. And it was absolutely great kind of coming back, not really able to jump right into the Discord right away, but it was absolutely just wonderful to see that the conversation somehow had spread from the in-person conversation to Discord. And there seems to be a lot of talk about tokenomics and options for improving it, both maybe with the Houston update coming and what can and can't be done in that one, but I think more importantly with the Saturn update that's right afterwards, and really trying to get there's a couple of design parameters that could be implemented, and it does look like there's been a lot of discussion by many people in the community about how to improve these things. Mel, or Mav, any thoughts about this, and how can people find more about this and start engaging on this kind of enhancement considerations?
I would say that if you're interested in this, now is certainly the time to get involved. The thing with a protocol like Rocket Pool is a lot of the direction and the research happens organically, and it does happen in a decentralized way out in the open. There's no kind of prerequisite of where any discussion should take place or who should be involved. So I would say the one thing that people can do is just to be involved. Unfortunately, it is something that does kind of grow over a period of time. If you kind of expect to jump in once a month and spend 5 minutes, that might be hard to contribute at that level. But if you're really interested in helping to develop the protocol and to see it develop into the best that it can be, obviously Discord, great place to be, and the DAO governance forum too. So at some point we will probably need to do some kind of town hall once some ideas have kind of bedded down to discuss this. Perhaps that's a job for the new year. And since we are heading to East Denver, assuming there's a speaking opportunity for Rocket Pool, that might be a good time to talk about it as well.
Yeah, it's interesting. Certainly Discord and the forum have their pros and cons. The pros is that you get something in writing you can refer back to, and people in different time zones can, participate equally just by, continuing the thread or back reading the thread. But I also do like the ideal of, a couple of town halls, chit chats maybe that we could do. Perhaps maybe, I don't know if we have time in front of the holiday break or maybe shortly after in January, where we could have a couple of community, calls on chit chat where we could have a little bit more interactive design, or maybe we invite some of the folks that are following the conversations very thoroughly to lay out some of the options or explain them a little bit, option A, option B, option C. Yeah. I think that would really help to try to kind of narrow these down, because there are a lot of options. But yeah, on the topic of ETH Denver, I think that one of the things we want to mention here is we're kind of reaching the top of the hour here is the ETH Denver applications are up and open. Again, I think Mav, the Rocket Pool team, is going to have hopefully a strong showing this year at ETH Denver. So if you're at all interested in attending, fill out the application. I did post in the conferences channel a little kind of Ken's Cliff Notes on how to do the application. It's a little, it could be a little daunting or a little onerous at first the way they have it, but you could join the Spork DAO. There's no cost to join. you just join. They do that for kind of some legal reasons there in Denver as the co-op, and then you're able to apply, and most likely, especially applying this early, will get a free ticket to ETH Denver. And if you haven't gone to ETH Denver, or if you have, it's just a very premier Ethereum focused, although there are other protocols, conference that covers every aspect of blockchain. And I don't think that they call it a conference. I call it a festival this year. I, for one, am really looking forward to it, especially not only going to the main event, the main festival, but also looking at perhaps attending all of the Battle Week, which is the weeks preceding it. There were just tremendous side events and learning opportunities in those preceding days that this year I really want to take advantage of.
We certainly need to have everyone on site in Denver. It may be a little bit more tricky, some more coordination required this time around, flying different team members in from different parts of the world. I've already had a good look at the flights. Denver's not the easiest place to get to from outside the US, let's just put it that way.
Yeah.
There may be a stopover or a connection somewhere involved from Australia, but we will see. I think last year, or for this ETH Denver, which we booked, this year's ETH Denver, the previous one, which we booked last year, it was around this time that everything started coming together, kind of before the holiday break at the end of the year. So that's certainly something that is very much on my radar, and I'm working at that between the flights and accommodation and the sponsorship itself. We may change up the sponsorship for the upcoming ETH Denver, but one thing that we obviously need is a very large booth space if the previous one was anything to go by. So now that Istanbul is all done, we can focus on the next one coming up in Denver, which I'm really looking forward to and hoping to get up on the mountain and enjoy some of the snow as well.
Yeah. There's one thing that came out of the meetup that we had there in Istanbul. I had the opportunity to chat a little bit with Grant about this, and maybe I'll take the opportunity to introduce it to the community here, and try to get some posts out when I get free later this week to the Discord. But one thought that did occur from seeing some similar activities there in Istanbul is perhaps we could do a very specific forum and set of presentations. When you go to ETH Denver, they've got the main stages. They're going to be doing them a little different this year, I think, to give them a little bit more quietness to the stages. But anyhow, you're just a presentation, a 20-minute presentation or a 30-minute, and there's all these different activities that present afterwards. But one of the things that is very popular are these kind of side events. And one thought that a number of us had there in Istanbul was perhaps we could do a RocketCon or a Denver liftoff or whatever we call it, which might be a whole day long symposium of multiple talks, perhaps by some of the dev team, perhaps by some of the more knowledgeable members in the community. Perhaps there could even be a grant that helps offset some of their travel costs, where we could really do some of the deep dives on Rocket Pool in a learning environment and have a little bit of interactive ability with the attendees in there. So I certainly want to float that ideal out and see what the community thinks from it. The other thing we could do that was very popular there, in fact, the rooms were overloaded, was these validator workshops. I remember last year Fornax did one that was well attended, and this year we saw Diva Protocols had done one there in Istanbul, and the room was literally beyond capacity. They probably actually had a fire hazard, to be honest, with it so packed up. But so many people that just wanted to learn how to set up a node, how to run the validator, had basic questions about staking, things that we take for granted here, but people from literally zero to hero could learn it, and so that could also be another corollary event that happens there. And I was personally thinking that if there's enough volunteers and enough of the team there, that we could probably do both. But it's something we'd have to, determine interest and really start to plan aggressively here if we're going to make these deadlines.
Yeah, true. All very good points. Considering that we can usually talk for at least an hour, if not two, every week with everything that's happened in the rocket pool world, I'm sure an annual in-person event could easily fill an entire day.
Yeah.
So, yeah, would be great to see that come together. Watch this space.
Yeah, and I think it could be a really good educational and informal conference. So if you think this might be value, definitely comment in. We'll get some posts up, but definitely post in trading and kind of give feedback on there. Kind of starting to solicit it a little bit more than just conversations over some drinks there in Istanbul. So. But now looking ahead here, I guess as we're kind of planning out the remainder of this year, what do we have on deck for continued community calls?
So by my count, there's 3 more. Is it? I guess it is 3 more weeks before Christmas. That's it's a little bit scary. We do have some more guests lined up. A little bit more than penciled in at this stage. Pretty much certain in terms of dates and times. They are listed, of course, in Discord in the events section. Next week, we're going to have Sam from Stakeosaurus join. If you haven't heard of Stakeosaurus, they are a great resource for solo stakers. So a great opportunity to chat with Sam about node operation. It's also a bi-weekly week, although we will not have Langer, so it will probably just be me. I think Jasper will be around as well for that. The following week is Oval. We had a go at scheduling Oval, but has subsequently been bumped out. Be good to chat with them about the latest developments in the world of DVT. We did have a few chats with them in Istanbul, which was great. And then the following week, that's well into December at this point, around the 20th, we might get Fornax on to chat about what he's been doing for Rocket Pool. Obviously, Fornax being a new team member, but having been around and participating in the protocol for much longer than that. Great to have him on as a guest, and that will also be a bi-weekly week, the last one before the end of the year. Yeah, looks like it. So yeah, it'd be great to see everyone come along and support those community calls as well. But with that, seeing as we're past the hour, it's probably time to wrap up the space. So big thanks, of course, to Ken helping to host, and to our guest from Stella in the first part of this call. We're going to get this recording up onto YouTube. If you've tuned in halfway through, you can catch up there. And as always, we'll see you in trading and hopefully on the next space as well.
Yeah, well, thank you, Mav. You're absolutely right. The hour goes by faster than anything here. So it's been great to spend another hour with you and the Rocket Pool community. And I look forward to the next community calls ahead.
See ya.
See ya. Bye.